All right. Thank you guys for joining. We've got a good group of folks that are joining in. We see more and more. So we're going to give it another minute or so, and then we'll start. Today's topic is 10 things you need to know about raising capital today. It'll be a conversation between me, your host, Chris Padilla from Legendary, and Darin Mangum, senior partner at Mangum & Associates, Securities law firm that helps folks who are raising capital, going public, and making sure that they're protected as they begin to talk about their ideas and how to raise capital. So we'll just give it a few more minutes. We've got, since I started talking just now, we've had 5 more people join. So we'll give it another minute or so, and then we'll make sure that we get started here. Just so you guys know, there's a chat feature on the webinar, and on the chat feature you could submit chat questions if there are questions that you have, and so feel free to chat in questions. Feel free to ask us any questions you have. We'll respond to those either as we're going or at the very end. So again, thank you. We've had some more people join. We're going to give it just a couple more minutes to let more folks join in, including Darin. He's wrapping up a phone call. So we've got 10 things you need to know about raising capital. And so we're going to go through it from a lawyer's perspective, making sure that you're all buttoned up, as well as a reputation perspective. You're a CEO, you're an entrepreneur, and you want to make sure that you're putting your best foot forward. We're going to go over some of the things that we think are important, and happy to answer questions as we go through it. So let's give it another minute, and we'll be going here. All right. We'll go ahead and get started into, and we'll go ahead and just start getting rolling through the slides. I'll make the introductions as we get going. So let's go ahead and push play. All right, there we go. So today, the 2 folks who will be speaking with you are me. I'm Chris Padilla. I'm the CEO and founder at Legendary. We work with high-profile individuals as well as companies to take control of their brand, either in a crisis mode or in preparation for an event. The majority of the folks that we work with are raising capital, have been acquired, or are looking to be acquired. And we help make sure that if there's any diligence or things like that that need to be done, or negative content that maybe doesn't support the story or narrative, that we can help you build that and or protect it. We have folks across the globe, and we've helped numerous brands and individuals prepare and or protect their reputation online. Darin, who's going to be joining us here in a moment, is the managing partner at Mangum & Associates. He's been at this for quite a while. He specializes in securities law. So he's got a nationwide clientele. He works with a lot of global clients who are doing business outside the US, but then want to come to the US, and they need to understand all of the different regulations around how to raise capital, how to make an offering here in the US. He's got, real estate syndicators, private equity, real estate acquisition groups, private investment companies, a bunch of VC funds, hedge funds, blockchain, you name it. He works with all these folks in various capacities, and is someone who can speak to the law as an expert. So Darin is the right person for this. And so we're excited to hear from him. So he'll be joining us here in a moment. He's wrapping up a phone call and getting ready to hop on with us. And so maybe as we get started, what would be great is if you guys have any questions that you'd like us to cover, please shoot them now. There's a window on the right where you can type in questions, and with that, I can answer questions. We can actually help answer any questions you guys want to make sure that you're getting also what you want out of the webinar, not just us telling you what we think. So please shoot questions there. I'll get to them, and I can ask Darin these questions, or I can answer them if it's relevant to me. And so that's a great tool for us to kind of have a more interactive experience. So we go to the next slide. We'll just get looking at our first question, and that's really where we want to get going. And again, how do you start raising capital? So we'll leave it here. There'll be 10 questions. Each one will go through a variety of answers, and then we'll go through kind of Q&A. And so I want to let you guys kind of get a sense of kind of how the field is going. So we're going to get started here with kind of that first question, which is, where do you start? How do you start? In the group today that we're speaking to, we've got a mixture of entrepreneurs, we've got a mixture of lawyers, we have a mixture of business owners, right? And the answer is going to be pretty much the same for everyone. How do you start? And I think that's something that we'll dig into here. So let me get started. It looks like we're getting a few questions to come in, so thank you guys. Again, on the right hand side, there's a little box where you can put your questions, and we can get in there. But it looks like, no, we'll just leave it on the first slide, and then Darin's joining here. We just need to make sure the link is sent to him again. All right, so getting pulled up. All right, guys, just 1 second. Yeah, we'll get some of these questions answered. It looks like a lot of these are going to be more Darin legal questions, so we'll get to some of those, and we'll answer them for you. All right, here we go. All right. I am actually not seeing on my screen the webinar anymore. So 1 second, guys. Having some technical difficulty here. All right. Darin, looks like you've joined, and we can see you, but we cannot hear you yet. All right. So let's get, not yet. Almost one. So I've done an introduction and gone through introductions of your role, who you are, your company, what we've got going, and we're just getting ready to get started on the first 10 questions. So once we get the audio connected, and if we can't get the mic, maybe just go directly with your computer audio. For some reason, don't know if the mic is actually. It looks like it's registering. So if you maybe just, when you click, is there an option to do computer audio on the webinar? Just click computer audio. Now, here you go. That works. That works.
Sorry about that. Wasn't clear what, I didn't know I was going to be automatically muted, right? So, okay.
All right. Yeah, they do that so that when you, yeah, we can hear you just fine.
Okay.
Perfect. So thanks, Darin, for joining. We've got a good host of folks here so far. We have gone through introductions, and we're kind of just starting on the first question, right? So we've got a group of entrepreneurs, we've got a group of lawyers, we've got a group of business folk on the line. Question number one, we can go to the next slide. It's like, how do I start raising capital, right? So where do you start? And so here are 5 key points. And these are things that you've seen that we see. One is, develop a comprehensive business plan. Darin, we'll go through some of these. When you're looking at folks who are coming to you, bringing their kind of ideas, when they say a business plan, what should that look like? How much do they need to have ready? Like, is it presentations? Is it just an idea? What do you see being most successful? And what are some of the variables you see?
Yeah, I mean, people make the, can you hear me okay? Yeah?
Yeah.
Everything's good? Okay. Yeah, when a comprehensive business plan, I mean, you see a lot of different business plan, software out there, people drafting, full-blown business plans. A lot of those templates are based on, applying for a loan from a bank. A lot of those business plans are very comprehensive, and which is great. I mean, if you have a business plan to that level, then that's fantastic. We can certainly use that, but that's certainly not necessary. I mean, we've been able to take people from a just, hey, they've got an idea on the back of a napkin, and they're that's fine. We can certainly take you however you come. I would not spend like weeks and weeks and months on a business plan. Although, certainly you wanted to maybe think through exactly what you're planning on doing with the capital. What is the value proposition you're offering to the investors and to the marketplace? What problem are you solving? Blah blah blah, all that stuff, right? Yeah.
So it sounds like it kind of varies, and then it varies on maybe that next question of like, okay, how do you figure out what kind of capital you need, right? And so when you're talking about raising capital, how do you determine the type of capital you need, right? And maybe help us understand the different types that there are that exist.
Right. So, yeah, the type of capital you need, plus, and that kind of leads into what forms of securities are you going to offer, right? What types of securities? If you're needing just if you need just like a loan for a temporary period of time, and your company has cash flow that enables you to service the debt, right? Obviously, that's okay. Maybe we're going to offer. Maybe you're going to offer promissory notes that have a short term on them, that offer a competitive interest rate, right? So maybe that's the type of capital you need, right? If you're you have a longer term horizon, if you don't have any current sources of revenue currently, and it's a longer time horizon, well, likely you're going to look at doing an equity offering where, hey, we're going to give you equity, and you're going to have it's more of a longer term play, right? You don't have this payment obligation over your head, and that kind of thing, right? So it depends on the time horizon, how do you, you put yourself in the investor's shoes and say, okay, what am I actually asking for? What does the company actually need in the next,
Right.
6 months, 12 months, 24 months, whatever that time horizon is, right?
Yeah.
Certainly, if you're able to, a lot of times people they'll borrow money from a bank, but if they can get money from a bank, I mean, banks are very difficult, especially nowadays, to get money from, especially any kind of an entrepreneurial venture. But even if you could get some money from a bank, it's usually not exactly what you need, or the deal terms aren't as enough, and so they then turn to the private equity markets, the private capital markets for the
Right. And oftentimes we see that depending on who you're going after, you have to be prepared to go through more diligence, right? So there's, depending on the type of investor and how fast you need the capital or the type of capital you're looking for, each one of these questions can have a different answer, right? And so that's why I think one of the most important things you can do is kind of identify who is the right investor for the deal that you're looking to do. Because at the end of the day, once you receive the money, you then are attached to that investor group, which has their own unique set of requirements and or things that they're going to require of you long term, right? So let's go to the next question. And then we've got a bunch of questions coming in, and I think that some of them are relevant to what we're talking to. So how do you find investors? And I guess with this, I'll go to the first question from the group, if that's okay, Darin.
Yeah.
So would you say that private investors are more interested or intrigued by partners? Go ahead and leave it on that other screen. Let's go back to, yeah. Would you say that private investors are more interested or intrigued by the partners who are giving their capital to, or are they more interested in the specific fund or deal structure or returns in the deal, right? So the question is, deal structure, how great is the deal, or how the folks involved? What do you see? What's been your experience?
It's always the people. The people. I mean, the numbers could look great story. The numbers could be great. I mean, really attractive returns, but it always comes down to the people. That's the most important, right? Can I trust this person? Can I trust this team to deliver, or at least make a reasonable effort to make it happen? Are they? Yeah, there's no guarantees, but because anybody can make a nice looking spreadsheet or a nice looking pitch deck and make it look super attractive, but it's always the people that are most critical.
Awesome. Great. So that's number one. We've got like 8 more, so we'll just keep on going. So how do you find investors, right? So you've got your pitch, you've got your stuff, you're ready, you've kind of got what you think the right structure is. Here the list of ideas, right? So where do you go find them, right? So can you pull that slide up again? I'm not in charge of the slide, so look, there's a number of ways you can do it, right? You can network with your own group, your own mutual contacts, folks that you know. Oftentimes there's events or industry conferences you can attend, online platforms, angel investor groups, or just angel investors you might know, crowdfunding, direct outreach. Each one of these, Darin, I guess, you also need to make sure that your deal is set up to be able to work with different ways of raising capital, right? So maybe if you're doing crowdfunding, well, how do you need to set up the deal, right? If you're raising money from on a crowdfunding platform, what regulations you need to make sure you're set up for, or Let's say if you're taking from angel investors, or let's say you're taking from mutual contacts, but maybe they're not accredited. What are some of the different things that you need to take into account as an entrepreneur raising capital in those circumstances?
Yeah, and this is a great slide. I mean, certainly there's different, depending on the types of investor. That's always my first question with a new client is like, what kind of investors do you want? You know, are you okay with lots of small investors who, you know, may not be putting in a lot of money, but maybe they have a lot of enthusiasm and they're really, maybe they're your current customers, or they're, you know, I mean, if that's the case, then certainly crowdfunding is an excellent vehicle to do that, right? Lots of small investors can participate. And lots of social media buzz can be drawn around a crowdfunding deal. But you know, it's not a good fit for everybody. You know, some people are like, no, we just need a handful of large angel investors to just fund the deal. Okay, well, guess what? You know, those kind of angel investors aren't hanging around where the crowdfunding investors are, right? So, you know, it's always, you know, Chris, you're a big fisherman, right? It's always, you know, we've gone fishing a lot, and it's like, well, where are we gonna? What kind of fish do we want, right? If we're gonna go bass fishing, right? We're gonna go up, you know, if we want trout, right? We're gonna go Utah, up to one of the canyons in Utah to go get some trout, right? If we want some mahi, right? We're gonna go out off the coast of Puerto Rico and troll for those kind of fish, right? So it depends on what kind of investors you want. That's really directs where you're going to focus your marketing efforts and what kind of things you're going to do, right? So that's where you need to start, you know.
Okay, excellent. And so, you know, really, I think one thing that I've noticed when putting a deal together is, look, you find an investor, you start learning kind of who you really need to be talking to and what they're going to need from you. But I think the number one thing is to be ready, right? So have all your ducks in a row. So I guess the next question that we have after this, after you've kind of identified who they are, kind of what are they looking for, right? So you can pop to the next slide again. So the question would be, you know, what you answered already is, look, it's not necessarily the deal structure or the presentation, it's the people involved, right? Next slide. So it's having all of these things in place. And so one of the questions we actually have from the group is, you know, what type of exit strategy, or what would you suggest for building an exit strategy for investors, right? What are you seeing that's working, or what's something creative or cool that you've seen? Let's say that you've got all your ducks in a row, you found the right investors. Is there an exit strategy that you see that's really attractive for investors? How do you structure that in the deal?
Yeah, well, certainly there's, depending on if it's a real estate project, let's say, I mean, usually the exit strategy is selling the property, right? After so many years, after you put in improvements, or, you know, you've maybe milked it for the cash flow for a while, but now maybe it's at a higher valuation. Maybe the market is in a place where you could sell the property, right? You know, other exit strategies depend upon, again, like if it's a, you know, maybe it's like we have a client that's a pharmaceutical company, right? And their whole goal is to sell the intellectual property that they've developed, right? That's their exit, you know. You know, other companies are like more, hey, we're in it for the long term. Right before this call, I was talking to a client that's, you know, they're putting in charging stations for electric vehicles. You know, their exit strategy isn't an exit. It's we're going to take the company public, and then maybe we'll sell some of our shares to the public, right? And that's our exit, right? So it really depends upon the deal, right? I mean, certainly you want to be, you know, thinking ahead that way, yeah, certainly when it comes to, it just really depends on what's your long-term objective at the end of the day? Where do you want to be, 5 years from now? What, obviously you're not going to do this forever.
Okay, so let's say you found your investor group, you've got your business plan, your pitch, all that together. What is the best way to structure your business to be able to raise capital, right? So let's say they like the plan, they like you. Like, what's the best business structure to present to these guys? What are you seeing as kind of a great structure for that?
Yeah, and I hate always to say it depends upon the deal, but it does. I mean, but as far as like the structure, if it's a very limited, like if it's a very limited project type, venture where, hey, we're going to buy this hotel on 123 Main Street, and we're going to then develop it into a hotel and then maybe sell it to a large operator or something like that. Okay, well then that's a very specific, usually like a limited partnership or an LLC structure is good for that. If it's more of a kind of a corporate growth kind of model where you've got, hey, we're going to be selling shares to the public, then, typically, like a corporation, selling stock, preferred stock, convertible debt, different things like that could be a good vehicle to do that, so it does depend upon the overall nature, but yeah, certainly that could be structured. If you're just strictly doing debt and you're not doing any kind of equity, then it doesn't really matter. Hey, we're selling promissory notes, or we're selling, it doesn't really matter, the underlying corporate structure, because you're just selling debt, right?
Okay.
Unless it's convertible debt, right? Then okay, well then, we'd want to, what is the investor converting into potentially, right? Then that needs to be addressed. But, generally speaking, just, the entity would just depend upon what your objectives are, right? So.
Okay.
Awesome.
So that's great, super helpful. I think that's one of the reasons why when you're going to raise capital, you've got to have a team that can help you, that's had experience, a legal group that can help you navigate some of the questions based on the type of offering that you've got.
Yeah.
Let's go to the next slide. So you found your investors, great, okay, or you're starting to talk to folks. The next question is, wow, how long should it take to raise capital? And so as we look at the next slide, you'll see, on average, let's say you need to build into your business plan, several months, 3 to 6 months at a minimum, to kind of look at time you need to be able to get your story together, to be able to build the story, to be able to start practicing your pitch, getting in front of folks, and raising capital. Now, for some people, this seem, you might be able to raise capital a lot faster because you've done it before, you know how it works, you already have built a network, right? Let's say this is a new idea, new network, new folks. This is kind of how accurate do you think this is, Darin? 3 to 6 months. Your clients, how long is it taking some of your clients to raise capital?
Yeah, I mean, I think 3 to 6 months is a very good window to plan for. You could be, now if you have, like you're saying, if you have a list of investors that you have already been talking to and that are excited about it, well, that's going to be a lot shorter window, right? Because you're not hitting the ground cold. You're basically just, at that point, you're just, we just need to drop all the paperwork and make sure it's all legal, and then we're going to ahead and bring these investors in that are ready to go, right? If you don't have those investors ready to go, and some investors won't take you seriously unless you have unless you have all that paperwork ready to go. I mean, to them, it's just a deal. You're just talking hey, wouldn't it be great if we, took rockets to the moon? Okay, well, that's great, but if you put together a formal offering and said, hey, well, this is our business plan, this is our plan to do so, this is how much capital we need, and here's how we're 100% legally compliant, and here's our management team, all that's already spelled out. Okay, well, now they're going to take you seriously, right? But yeah, as far as a time frame, Yeah, I mean, I've definitely seen that deals fund rather quickly, and other ones take longer than 3 to 6 months. I mean, you may you may have everything everything's ready to go, but you're just maybe not talking to the right investor groups, right? You're out fishing in the ocean, and you should be fishing in a different spot, right? So you're wondered. It's not really because the deal isn't good. It's just maybe you're just not in the right spot, right? You're not in the right. You're not talking to the right investors, right? Or you're so anyway that. So maybe you need to shift where that is. But yeah, 3 to 6 months is pretty
Okay,
good rule of thumb to say, hey, you know, plan on this length of time.
cool. Next slide. Um, and I think when you're looking at this, you just said all of these things, right? So I think that's right on.
Yeah.
Yes, if you're looking at terms like an IPO or a private offering, what are some of the different regulations, and how do those regulations affect timing? Let's say you're doing, I've heard the term like Reg A plus, right? Like
Yeah.
versus 506C or 506B. Like how does timing vary within each one of those regulations?
Yeah, so that's a great question. If you're under, say, what we call exemptions from registration, meaning that um, you don't have to register with the SEC as long as you comply with the regulation, the exemption, right? Then you're good to go, right? You don't have to. SEC doesn't have to pre-approve you to sell to the investors, right? And what examples of that is Regulation D, as in David. And when we talk about 506B, 506C, those are underneath that Regulation D umbrella, okay? And also Regulation crowdfunding, those are regulations that and we say, usually 30 days. That's the amount of time that it typically takes to put everything to get all your eggs all your ducks in a row, all your eggs in the basket and ready to go, right? So so that's a lot quicker procedure to get ready to bring in the investors, right? So we always tell people 30 days is a reasonable time. If on the other hand you're doing a Regulation A offering, or let's say just a just a straight registration of any kind, that takes time, because guess what? Because I'm selling to the general public, I'm not fitting within these exemptions like Regulation D or Regulation crowdfunding. I'm not doing it under those exemptions. I'm fully registering this offering with the SEC, right? Okay, well, SEC's got to look at it. They've got to review it, and they're not a rubber stamp. They don't they're not rubber stamping everything that comes through, right? They got to put their 2 cents in. So it takes time. I tell people at least a 4 to 6 month window if you're doing a public offering, because why? SEC, not only do we have to prepare it and then file it, but then the SEC has to review it, and then they get back to you. Oh, well, could you change this, or please elaborate on this? You got to go back and forth at least one or two, maybe several dozen times to get it to where the SEC feels like they've done their job. I mean, they're a regulator, right? They don't want to. The last thing they want to be accused of is just rubber stamping things, and so they gotta, even everything looks good, they still have to maybe change this, do this, so at least they feel like they're doing their job. I mean, obviously they're trying to do their job. They're trying to protect the investing public. That's their job. And so, but it just takes time, and it's way more expensive, because it takes time. It costs way more to do a public offering like Regulation A versus one of these exemptions that we've been talking about. So
Okay.
what a lot of people do is especially if they want to do a public offering, they'll start out with a Regulation D or a Regulation crowdfunding to get the ball so they can start bringing in capital, because you can have a Regulation A offering in the hopper going through that process, but in the meantime you're just raising capital under Regulation D or Regulation crowdfunding. So it's not like one or the other, right? I mean, you have to look at it in stages. and depending on, again, what your capital needs are, right? So anyway, that's kind of, when you look at timing, that's how that plays into that, you know.
That's awesome. It seems like if you have a strategy for how you want to go, it's at the end of the day, you want to IPO or you want to go
Right.
public or have a public offering. The strategy could be you have a different offering that gets you kind of going, and then you end up executing the other strategy once you kind of got the ball rolling, which that's great. So let's go to the next question here, which is, you know, how much can you raise? And so the next slide, real quick. You know, so under each one of these different regulations, look, this is kind of just a sheet that we threw on there, right? With some prep time and things like that. But
yeah,
what are some of the caps? So it looks like some of the regulations only give you a certain amount of dollars. Like, help us understand how much can you raise?
yeah.
And kind of how to, if you will.
Yeah, and we prepared this this chart. It's a quick reference. You know, yeah. So again, when you look at your particular project or your particular deal, okay, how much capital do you need, right? Not only what kind of investors do you want, but how much capital do you need? Um, and um, and so, you know, if as far as the dollar amounts go, you know, the good news is regulation crowdfunding was recently revised to it was capped at like a little over $1 million, and that just was, nobody was using it because there was like, oh, $1 million, that just kind of, it's not even, you know, it doesn't really get me down the road, you know, it's not a whole lot, and I've got to go through all this process. I got to pay a lawyer. I got to, you know, it just wasn't. A lot of people weren't using it. Once they bumped it up to 5 million, okay, well now you could do you know, quite a bit more with 5 million than you could with $1 million. So a lot more increase in use in regulation crowdfunding. And again, it's geared toward your non-accredited people. If you're okay with small investors putting in small amounts, then, you know, regulation crowdfunding is something you want to look at. Like it says here, 30 days. But, you know, again, it's only 5 million, right? A lot of clients say, look, 5 million is not going to get this hotel built. You know, this is a $20 million, $50 million project. Regulation crowdfunding is not going to even make a dent in that. Okay, well then maybe we don't, you know, you don't want to look at regulation crowdfunding. You want to just look at regulation D. Regulation D, I mean, over 95% of all the private capital raised in the United States and is done under regulation D. It's still by and far the most widely used exemption, because there is no limit on the amount, no limit. Now, you know, depending on whether you're going 506B, 506C, there's limitations on, you know, you know, how, you know, can I bring non-accredited into a regulation D? Well, yes, you can under 506B, but not under 506C. So a lot of it's in those details that, you know, depending on, you know, again, are you going to publicly advertise or not, right? And you know, but as far as dollar amounts go, that's really where regulation D beats everything else, because it, you know, there is no cap. There is just theoretically, sky's the limit.
Awesome. So that is exactly the kind of information that I think folks are looking for, and I think.
Yeah.
So let's go to the next set of questions here. So if we look at kind of, okay, how much can you raise? Obviously, it depends on how much you need. All those things are factors that you'll know based on your business plan. But let's look at like, okay, hey, what are some of the trends? Where are you seeing investors putting their money, right? You're seeing deals come into your firm. Let's go to the next slide. You've got, you know, some of the things that we've talked about, right? So maybe Darin, I'll let you talk about this, but what are you seeing? And, you know, these are just a few things. And if there's anything that's not on here, go ahead.
Yeah.
But like, what are the trends that you're seeing right now as far as investors?
Yeah, I think it, you know, certainly, I think the last one, I mean, yeah, technology and tangibles obviously are very, very hot. You know, you talked about AI, tangible assets like real estate. I mean, you know, we've done a lot of digital assets over the past, you know, 7 years or 10 years, however long we've been doing cryptocurrency, different kind of digital assets, and that just, it's either super hot or it's not. You know, it's when people get nervous or the markets get a little, you know, weird. I mean, people they flee to tangible assets, like, you know, and that's why real estate always remains very, very strong. Obviously, technology though is I mean, I think, you know, technology still is what's driving the stock market, driving the markets. Um, you
So
know,
you're saying you're seeing like there's kind of like this shift of like questions in the market, question in the market, and so now, hey, we lost the slides. Just if you can bring it back. Um, all right, one second. So you're seeing a shift where we're seeing. All right.
yeah,
We're seeing a shift. So you're seeing a little bit of market volatility, right? And so you're saying when you see that, you're seeing folks going to tangible assets. So real estate. Beyond real estate, is that like investing in like gold and silver, or is that in like farms? Like what other tangible
right.
assets are you seeing that are receiving attention?
Yeah, certainly real estate, yeah, tangibles. I mean, we have seen an increase in like energy, oil and gas, you know, precious metals, things of that nature. When the commodity prices are high, then that's where people go, right? And unfortunately, sometimes people, you know, again, that's always going to be in flux, right? I was going to say, um, you know, the time to sort of do a project is when prices are low, right? Like when there's opportunity, like, I mean, like oil and gas, for an example, we've done a lot of oil and gas related projects over the years, and um, you know, typically when the best deals are had when the price is in the tank, right, or down at the bottom of the barrel, right? When oil prices are negative, right? That's the best time to be doing an oil project, right? But not when it's high. But again, it just that's always going to be in flux depending on what's going on in the markets. That it's all, you know, it's all interconnected, right? What's going on in the interest rates, what's going on. I follow the Wall Street Journal every day, and I'm always looking at what's happening, what's happening on the political scene, what's happening geopolitically. Just all of it's just in flux, right? And so, but I mean, you can track, you follow it every day, or you can certainly look to, hey, what are the long-term trends for the next 5 to 10 years. Well, real estate's not going anywhere. Technology is going to keep going forward. I'm still personally bullish on the digital asset crypto space. I mean, I think that's that's just going to eventually, and I don't make any predictions or recommendations, but I just think as an overall industry, I think it's just going to continue to be
Right.
strong. And then, other things like, you know, um, anything that anything that's tangible, like, is going to be in the long run, I think a good place to be.
And I think you brought up in our preparation for this, like that, a few years ago, even last year, the ESG investing was kind of like a hot topic, right? People
Yeah,
wanted, investors needed to have something in their portfolios to kind of help them look nice, but at the end of the day, it seems like
yeah.
people see enough of it, they want to see the returns, right?
Absolutely, yeah. I'm still a big fan of, environmental, social causes. I mean, I'm involved with some companies that are very much on a social impact setting, but at the end of the day, I mean, investors, they're going to want to see a return, and they can only, you know, the ESG has sort of been, I think it's a good, the intention has been good, but ultimately, if that's the core of your investment is based upon I mean, if it's not going to make, if it doesn't make money, right, ultimately you're not going to, it's not sustainable, right? So I think I mean, people are still emphasizing ESG, but they're not making that the core focus of their pitch, at least to investors, right? Because the honeymoon's over, right? It's like, oh, where's my returns, right? That's what ultimately investors care about, right? So
which is why you're getting back to the idea of tangible assets, right? Now's the time. People put money into crypto, they put money into kind of things that they can't see.
yeah,
And coming back to kind of like a more real world scenario, which is interesting.
right,
So let's go to the next slide, where we look at legal compliance issues we should be aware of. Next slide. Where kind of we've talked about what we've got to do to kind of just make sure got to make sure your ducks are in a row, right? So you've got your legal documentation, you're transparent and open. With that, I know Darin, with some of the documentation you put together, there's specific things you do within a PPM that are called like disclosure statements, right? That
right,
literally help you be 100% transparent. Let's
right.
just push through this because we can spend a lot of time talking about it. Let's go to the next question. What digital marketing assets do you need to raise capital? And I just got a question as well that I think we'll answer too in a second. So look, I think the digital or marketing assets that you need, this is something that I think, Darin, you've seen and we see on our side, which is, if you go to the next slide, when you are going to raise capital, the internet can be your best friend or your worst enemy, right? And if you look at oftentimes people will know your name, right? And then after they know your name, they'll Google you, or they'll ask the person who you met, and maybe there's something there. But what we see is that you need to make sure that you have a strong online presence with your executive group. You need to make sure that there's information out there, be it their LinkedIn, their Wikipedia, personal website. But you need to make sure that you optimize your Google search results, right? We've seen deals where photos from social media have been on there from 10 years ago that just aren't kind of what you'd want people to be your first impression, right? And then another thing is this, look, you start raising capital, you're gonna maybe start drawing some attention, right? And so with that, you're getting attention drawn to you, information could pop up. And so that's where we stand on the third piece. How do you build a resilient digital presence? Which means more than just your LinkedIn profile, more than just in your personal website. You need to really have a stronger approach and much more content out there about you or the brand, to help make sure that you have a better control over what ends up popping up top, because maybe it doesn't align with maybe your current narrative, or maybe it just doesn't fit, or maybe you want it to. Like, those are all things that you need to make sure that you're aware of. And so this last one, I think, you mentioned, Darin, whatever it is, just make sure it's building credibility towards you, right? So do you have any examples of kind of clients that have been helped or hurt by not controlling their digital presence?
Yeah, absolutely. We had a client who had he had a great invention. He had a great it was a biotech kind of medical device that he had invented that had just tremendous capacity to help people. He had proof that it worked. It very much had some patents around it, very much. But yeah, he put, like, I think, zero thought into. And I think what during the course of the representation, we sort of, in preparation of the documents and all that, we, typically we try to do a quick search. I mean, it's not comprehensive, but we try to know who we're dealing with. And he had some felony convictions, like, that he didn't tell us about because I think he was embarrassed about. they didn't have anything to do with the medical device, or kind of, it wasn't like a fraudster, right? It just had something to do with like some domestic issues he had 10, 20 years ago, right? But it was a felony, right? And a lot of people see felon and they don't look any further, right? Oh, felon, it doesn't matter what kind of felon, they're felon, right? And that, I mean, and you did a quick search on it, and sure enough, these things popped up as far as this felony conviction, and it really hampered his ability to. You didn't see anything about his brilliant technology, his invention. You just saw this kind of crap from, again, literally 20, like I think it was like 20 years ago, like, and I mean, he did, he had served a little time in prison, got out, reformed his life. He had a great story, just kind of a changed person, right? Nicest guy you ever meet, right? But he just had this baggage, right? And that just unfortunately it hurt him, right? And I think we turned him over to either you, Chris, or we said, hey, look, this has got to be addressed, because I mean, as great as this technology is, as great as you are as a person, we like you. I mean, we're not judging you, but the internet judges you, right? and you're just not going to get that second conversation because of this crap out there. And so, I mean, he did subsequently spend some time trying to put out good content, tried to, tried to, put out some good press on himself, so he doesn't look so bad online, right? But some people, they don't, that's not in their consciousness. They're like, I don't care what people say online. Well, welcome to the 21st century, right? Where you're judged by what you say or what you look like online. It's just a fact, right? So
it's interesting. So we work with a lot of family offices, and within our family offices, there was one group, a family, very successful, B in front of their name, right? Super successful group, but they were trying to do a deal with a number of banks. And because there was no presence about them online, there was nothing about their initiatives, even though these folks were, very successful, the banks actually wouldn't accept them because they didn't meet the criteria, which was just having somewhat of a presence online. And so we've worked with folks who really actually don't really need the capital, but sometimes you need to have that presence just to start interacting. Even if you are successful and you want to raise capital, depending on your investor type, maybe it's a bank, maybe it's a trust, there needs to be something out there about you that can help them identify you, that can help them relate to you. And if it's negative, then that's what there is. Sometimes if there's nothing, that's also a negative. And so you've got to make sure that you've got stuff out there. So let's go to the next. Go ahead.
I was going to say, we had a client who received an offer from it was a group out of, I think, Dubai, that, it looked pretty legitimate, and they weren't asking for any sort of, there wasn't like some weird scam where they're asking for some kind of money, but it looked pretty legitimate. But it was so difficult for us to evaluate whether they were real, because they couldn't find anything, right? It was sort of like this comes from left field. And so we just ultimately advised them to not pursue it, because it was just not, you just couldn't figure it out, right? Whereas if they had done a little bit of, hey, building up a little presence, hey, we are legit. It's funny because some fraudsters do that all the time. Hey, look how legitimate we are, and but yet, some of the, it's just a factor, right, that you just have to deal with,
Yeah. All right, let's move on to the next slides, and we're coming to a close. I know some folks are getting ready to hop off, and so there's some questions we've got. So we just talked about this. Let's go to the next question, which is, how can I improve my online reputation to fast track my capital raising process? And let's just go to the answers real quick, and then we're going to go to the last set of questions that are coming on. So one is, look, monitor what's going on about you. Be proactive. Do Google searches, check out the internet. There's actually software that you can use that will tell you what's online. one thing, that I can say is I've had clients who have been deposed for Facebook comments or Twitter comments that they did 10 years ago. So one thing that you need to make sure is that you remember that the internet doesn't forget. And so you need to be aware of what's out there. And if you don't, there are groups like Legendary, my company, and others that can help you take a look at that, help you kind of build your presence so that you look the part. And then the other piece is this, look, and is just within your own business, within your own life, within what you're doing, gather reviews so that you can share those. Gather references so that you can share. Oftentimes investors will ask you for references, and those are relationships, right? So a lot of like the power that comes in raising capital, the power that comes in networking is through relationships. And so make sure that you're gathering those key folks that will be there to support you when you're putting your neck out there to say, hey, look, I'm going to go do this, right? So make sure you've got your testimonials and all those things ready. And let's just go to the last thing, Darin. We've got a number of questions and we've only got a few more minutes. So one of the questions was, how many non-accredited investors can you bring into a 506B?
35.
35. Okay. Boom, that's it. All right.
That's easy.
How long of a hold is normal when you're looking at like an investor putting money in? How long of a hold would you say is kind of normal?
12 months.
Okay, normal. Okay.
Yep.
So
I can go into further detail, but that's, yeah.
Okay, what is the best way to structure your business? We already did that one. Raising capital and unregistered finders or brokers. So like raising capital with unregistered finders or brokers. What are some of the kind of, what do we need to know about that?
Yeah, I just did a whole, yesterday we did in the PPM Attorney Capital Forum. That's a commercial for this, our member network that, we did a whole session on just this specific question, but yeah, it's very doable. You just have to make sure that you have to have a written finder fee agreement with those people, and they have to. It's a very narrow exception. And like I said, we took a whole hour talking about all the nuances behind it, but it's definitely possible. But you just need to get good securities counsel to make sure that it's done properly,
Look, and there's probably like 20 more questions that have come in. So what we'll do is we'll actually send this webinar out afterwards with our emails. So if you have questions, you can email us directly. And as Darin mentioned, he's got a Capital Forum, which is a membership that you can sign up for to get questions asked or answered pretty much regularly. As you can see, Darin's an expert in what he does. If you're looking to raise capital, if you're looking to protect yourself while raising capital, if you're looking to go into a meeting where you feel like you want to, or where you need that extra advice to kind of build your team, Darin's a great asset for that. We've seen it many times. Our company, Legendary, we help you so that when they Google your name or if you're looking to put together the right presentation to make sure that you're ready to raise capital, we can help you. And so we're here. Chris Padilla, Darin, thank you for joining us on today's webinar. We'll send this out to everybody. And thank you guys for joining us Friday. Have a great weekend. Anything else, Darin, you want to say to folks before we sign off?
I'll just say, the questions that we didn't get to, if you want to email us at our email addresses here, that'd be great. I'd be glad to address those. And yeah, you should definitely check out the PPM Attorney Capital Forum. It's an economical way to get the education around capital markets without. I mean, obviously, if you want to hire a law firm, great. But then the Capital Forum is meant to be more of an affordable monthly membership type thing where you can get on and all of our sessions are recorded, so you get access to all the past sessions as well as the live sessions that we do every week. So I'll definitely check that out if you want. But yeah, thanks for having me, Chris.
Yeah, no problem, Darin. Thank you. And thanks everyone for attending. Have a great weekend, and we'll share this with everyone.
Thank you.
Thank you. Bye.